Ways and means, hello. It is Friday, April 18th. It is 11 a.m. And we have two pieces of work to finish before lunch. We can look at before lunch. One is change to land use change tax that PVR has been discussing with the Agriculture Committee and wanted us to learn a little bit more about it. The vehicle for this change is not entirely clear, but wanted to spend some time on it while we had some time. And then we're gonna spend a moment on federal data sharing. But Jill, do you want to join us? Thanks.
Good morning. My name is Jill Remick. I'm the Director of Property Evaluation and Review at the Tax Department. So what I'm quickly hoping to show you folks is something pretty straightforward that I think will be taxpayer friendly. It's a very minor, but we'd like to think would really be helpful. So just for a little bit of context, the land use change tax is the tax that is calculated and imposed at 10% of the value of the removed parcel for property that's enrolled in current use. So it's certainly not meant to be like a revenue driver or anything like that. It is basically a penalty or a expense for removing property from the program. And so we have we have two pieces we're hoping could be considered for placement somewhere. It was sort of in our list of possible miscellaneous tax items because it's that sort of straightforward. So basically when the entire amount of property that's enrolled in the program is withdrawn, that's very straightforward. It's that valuation, and it's 10% of that value is the land use change tax. When it's a portion of the enrolled parcel, then a standalone valuation has to be done in order for the land use change to be calculated, and it's 10% of that valuation. So the process right now in statute is that valuation, when we get these land use change tax withdrawals, or someone contacts us to withdraw their property, or they're being moved for development, things like that, then we send a valuation request to the listers and assessors. And the statute has 30 days for them to return those valuations back to the tax department. So the two things we're trying to address here is one, the taxpayer, once they get that assessment, so they see the valuation assessment from the local assessing official, they only have the 14-day window to appeal that. So what's happening on a practical level is they're sending all those appeals to the tax department. And so by the time we get them and process them, they've actually missed their appeal window to appeal to the local assessing official. And then the other piece we're hoping to get at is there are about 30% of the time we go beyond the 30 days where we haven't gotten the valuation from the lister or assessor. And so we would like to, in the case where that window of time has expired, have the department set the value so that we can continue to issue the land use change tax bill and move forward from there. So I think I just had a little memo that was like my script. I didn't bring my laptop, so that wasn't helpful, but they're on your committee page. And then also our legal team just put together proposed language that is also on your committee page. So the hopes are a few things, right? So making sure that typically when someone is withdrawing or developing or selling a portion or buying a portion of a parcel, they have some sense of a timeline and a sense of urgency there. So 14 days is a very short turnaround to appeal the valuation, but then they're often sort of contacting us over and over trying to get what their land use change tax liability would be. Then we're contacting the lister assessor. And then they're sending their appeal to us instead of the lister assessor. So it causes some confusion. So we're hoping even just that extra 2 weeks, I think would give the landowners time to determine if they want to appeal or not, time to review the documentation and determine, okay, yes, I need to appeal this valuation to the local assessing officer. And so that we think is pretty straightforward and pretty taxpayer friendly. 14 days, I think, used to be fine. Even this year in 2025, we're getting property or personal income tax filings, right? Because this week was April 15th. And we're getting mail that is 10 to 17 days later than it was postmarked. Like the mail at 14 days is not much anymore. And especially when it comes to like current use property, you might want to be consulting with your forester, you might want to be talking with your siblings or whoever else is owning the property with you. And 14 days to like turn that appeal around is really tight. And so then what it also means is we're getting a lot of these appeals to the tax department that we can't actually, resolve. So we're docketing them and holding hearings or denying these appeals because they're coming to us and they're the valuation, which should have been appealed at the local level. So what we'd like to do is give the taxpayer 30 days rather than 14 to review and decide and appeal to the local assessing official. And then also separately. And again, these two things could happen independent of each other. The 14-day to 30-day, I think if we had our druthers would be a priority because I do think that would really help taxpayers get their appeal to the right place. And then when we do send the valuation to the municipality, if the 30 or probably 35-day, just to have a grace period, goes by and we have not been successful in getting that valuation done, that we could set the value so that we could issue the land use change tax bill. And in that case, the taxpayer would be able to appeal to us because we've both set the value and issued the tax. So these are not changing how it's calculated. They're not changing the rationale or who it applies to. It's really trying to sort of adjust for, human behavior and postal mail and making sure we can get responses to people who are waiting to do something with their property.
There's some timeline questions. All right, so Mark wants to withdraw land from current use. So the first point of contact for Mark is who?
The tax department.
Tax department. So then the tax department then notifies the town in which the parcel is located.
Yes,
How long does the town have to render a value?
30 days.
30 days. How often does the town need more than 30 days in order to just render a value?
Well, I don't think it takes longer than 30 days, but we have about 30% at any given time are past the 30-day. We just did like a spot check that last week. So there's 45 valuation requests currently outstanding, meaning the tax department has sent the requests to the local assessing officials, and about 15 are past the 30 days. So what we do now is we send emails, we call, we have it sort of part of our staff's routine to reach out and try to get those valuations. But a lot of local assessing officials are part-time, right? So again, like it's not always easy to reach somebody, and there may be reasons or turnover or something why they haven't gotten that done. But I have not heard that the 30-day window is too tight. It's more just, it's one more piece of work they have to do. And
Okay, because I think one of the things that Bill was trying to address originally too is just the difficulty in calculating the value. And sometimes a parcel may be harder to evaluate or put a value on than the entire parcel. Am I correct in this? How often does an assessor have to do a full review of it?
Curious to hear your thoughts. I think, you've got all the pieces you sort of need, right? You've got the lister card, you've got the sort of allocation of what because a lot of the property is maybe not the whole parcel because you have to keep a house site out, for example. So if you're looking at the entire property record card and you're looking at the components that are enrolled, and then if you're looking at all the components that are enrolled, that's already been calculated. That's fine. That's 10% of that, and it doesn't have to go through this process. But if it's a portion of that enrolled piece, now you've got to value that as a standalone parcel. But theoretically, you've got the pieces you need. I would hope it would be pretty straightforward. Yeah, go ahead. Sorry.
Yeah, it is in a sense, but there could be more to it. Again, if that parcel is on road frontage, with power, all those sort of things take into account, you use your land schedule. But if it's a bigger chunk of land with a back piece that's contiguous to somebody else's, that's going to have an effect on it as well. But that's why, it's probably helpful to have listers and assessors look at that because we are aware as to where it is in relationship to, the person that's buying it or other things that would increase or decrease the value of that 10 acres that they might have, taken out of current use.
It's not the valuation of the parcel that is the problem in terms of the timing. It's what I hear you saying.
I have not heard that 30 days is not long enough.
Okay.
And I think, I think it's good for me to hear you say that, other communications in between that happens too, because a lot of times, like you say, we might be in the office only 2 days a week.
Mhm.
And so, there goes a week almost if it's on a Friday, and we don't come in until Wednesday or Thursday, that sort of thing. So I appreciate that's happening as well, because that needs to still happen.
So then there's 14 days for the property owner to appeal to the assessing office. Okay, and then if they miss that, then they appeal to PVR?
If they miss that right now,
That's it.
that's it. But what happens is there's three places that you could be appealing. So you could appeal, say we're removing it, say we found development or the forest management, say there's a reason why the tax department is taking action, or you're letting us know I'm taking action and I want
Yeah.
to withdraw that. So you can appeal the director's decision. That's one piece. Okay, then let's say that part doesn't happen. So now we're valuing the portion of the parcel. So you're gonna appeal the value to the
Yeah.
lister. And then soon after that, you're gonna get the land use change tax bill from us with an appeal form, because the tax department always makes sure to let people know they can appeal the tax itself.
Okay.
So I don't think it's unreasonable that people think their appeal is supposed to come to the tax department, because it's current use determination by the director. Yes, we've gotten your withdrawal. And, the letters say, this is going to your local assessing official, that valuation times 10% is your land use change tax. And then they're also getting a piece of paper from us saying, here's your land use change tax bill and here's an appeal form. So it's like one step of 4 steps is appealed at the local level. And so I understand why people are confused, but I think if what's happening now is, say you're like, maybe after 12 days or 13 days, you sent an appeal, we've gotten it, maybe within 30 days, maybe not. It's too late to remand it back to the town or have the appeal go back to the town. So now they've appealed to the wrong place and we have to basically deny their appeal, or basically say, this is the value. You can appeal the land use change tax. So they're appealing the land use change tax itself, but what they're actually appealing is the value, but they haven't had enough time and they're getting pieces of paper from both entities. And 14 days is just not very long. So my hope is, our theory here is that we could cut back on appeals that end up in the wrong place. So they'd have time to go to the right place. And then second of all, if that process doesn't happen and is delayed, and despite our best efforts, we can't get that specific value, that we can at least assign a fair market value so that we can issue the land use change tax. And in that case, they would only need to appeal to us and then we would have to hear that appeal.
That's in those cases where the town assessor did not derive a value.
Right.
And then beyond the 30 days, how many days after that? Another 30 days after that window? Or I'm trying to understand the timeline. If the assessor didn't come back with a value,
Yeah.
then does that start the clock new for the tax department to come up with a value?
I hadn't actually thought through that part before. I suppose it would be similar to what we do now, where as soon as we possibly can, but yeah, we should get it back to them we should get it to the taxpayer within 30 days. Yeah.
Okay, so we should add that part.
Yeah, that's,
On that, okay.
again, I'm hoping we don't have to do that very often. And we
Yeah.
do, like, we call, we email, like, I would definitely, just from where we sit, we don't want to have to like replace a town's value with a PBR value. It'd be great to just get that. But there are so many times where we are managing very concerned and confused taxpayers who are trying, they've postponed closings and things have fallen through because they don't have the answer to this question. They could take an educated guess, especially if they're like selling the property or developing the property, they might know about what they think. But it definitely has this kind of delay. It causes a lot of problems. And then it also leads a lot of appeals to end up at the wrong place. So
Yeah,
if we could hear the appeal, because we've said it, then at least that's one more win if their valuations were late.
if they fail to do it, then you evaluated it, and then if they have a number of days, 14 days from the time they get that new evaluation with PBR, and it's not going to the town. That
Right.
probably makes sense to restart that clock.
Right.
Well, shouldn't they have 30 days on the end
Right.
too? I mean, 14 days for like a regular person receiving a piece of mail to do something about it, it's
Right.
wildly tight. I mean, I don't know about all of you, but like my mailbox is really pretty far from my house and I don't check my mail.
And I should point out, for what it's worth, outside of current use, the 14, it points to the grand list grievance window is still 14 days.
Yeah.
It just points to that. So that's a whole other can of worms, but it is a short window of time already.
So if the lister gives the valuation to the property owner and the property owner wants to appeal it, is that simply just going to the assessor or the lister and saying, no, I don't like it for whatever reason? Or can that extend to a BCA hearing?
So it points to basically the process is the same as if it's a grievance, so it can then continue on. I don't ever hear of that, and we don't see those come to PBR directors. So again, I think I don't know that this happens very often. And I mean, the majority of towns do get the valuation within the 30 days to us. But then the taxpayer still sends their appeal of that to us right now because of that tight window. But yeah, it's treated as a valuation.
And so you go to the lister and you grieve it and you say, no, I don't agree with this.
Mm-hmm.
And he says, that's the way it is. Oh, I want to file to the BCA. That
Right.
could obviously extend your time frame right
Right,
there before
right.
they get an answer back to you.
Right. And I have no like visual on what goes to BCA or doesn't, but yeah, that is currently what they're allowed to do. Yeah. And they could still do that.
Well, they couldn't do that within this time frame, though, couldn't they?
Then this would delay that timeline of 14 days to 30 days. If they're willing to go through that process. And
Right,
if
or
you-
even longer. I mean, a
Mhm.
BCA could take longer. By the time you warn a meeting and you get the folks there, you do the,
Yeah.
you do the inspection and all that kind of stuff, but that can take longer.
So again, there's two pieces that can operate separately. From my own perspective, from the time I've spent with my staff, even getting the 14 days to 30 days would be really helpful for these taxpayers.
Yeah.
And hopefully would allow us to not allow the appeals to go to the right place. And that would be great. But then the second piece of that is, if this 30 window comes and goes and the landowner is still waiting for the land use change tax, can we have a backup plan?
Right.
And then the third piece of that is that we would need to amend this slightly to add a time window for you all. That
I'm
happens.
happy to see our general counsel, Will Baker's here. He might be able to answer that too, but yes, yeah, right. So if we want to give 30 days of appeal for one methodology, we should do it the same for our.
And then also give you all a window that you have to deliver your evaluation. Yeah, okay.
Yeah.
Will, I'm not gonna ask you to comment on that because you did not come in here thinking. So, any other questions for Jill?
What's the turnaround time for regular appeals for the BCA?
Oh, I don't know. That is one of the reasons we're excited about the grand list moving to January, because that window of time is weeks and it's very tight for towns and assessors and reappraisal firms to do all those appeals, right? So like between the grand list date and then the grand lists that have to be filed in June and tax bills go out, it's a very tight turnaround already. But I don't know exactly how long it would take after the BCA to then go.
For the BCA, they're on a time frame too to get.
Right,
Yeah.
yeah.
So that's why I was wondering if that's 14 days or should we think about that?
Want to say it's very.
Yeah, sorry.
No, that's a good question.
So it sounds like we have a little change we would want to make to this language. It's all posted on our website and we need to find a vehicle for it, but if anyone has any, I hear people sounding generally comfortable with this, and if something comes up for you, let me know. Because if we do find a vehicle, it might be one of those last minute moments. So, great. Thanks, Jill.
I appreciate it.
Yeah, totally. Thank you. Brooke and Will, hello. Would you like to join us? Thanks. In whatever order works for you too.
Yeah. We love you chairs.
You fight hard to keep those two chairs, so please use them while you can. So folks, I asked Will and Rebecca to come in because there's been a lot of national news about IRS data being used in various ways beyond the IRS, which is a fairly huge change from existing practice. And know that there are a lot of communication pathways between between the IRS and our state tax system for very good reason, and just wanted to sort of check in. We have a lot of very clear provisions around privacy of our data here, and just wanted to see like how our tax data is doing.
Great.
Yeah.
Well, thank you very much for having us in. I'm Rebecca Samaroff, Deputy Commissioner, Tax Department, for the record.
And I'm Will Baker, Legal Director at Tax.
So yeah, I think more than most committees, this group is really aware that tax administration happens within very strict confidentiality provisions, securing tax data, both the state and federal level, which is why the current national landscape in news cycles like this is like particularly jarring. I would agree that feels like, at least in the way it feels for folks, like the biggest breach in confidence in like kind of IRS data security. I've been around for a while, which really, I think this committee has heard me and other department folks speak about this kind of like, almost to us like sacred covenant between taxpayer and tax administrator that, when you give this incredibly sensitive personal financial data to us, we're going to use it for tax administration. We're not going to use it for other purposes. And that trust is really essential for a voluntary system. And that's why we're also often in here saying like, please don't use our tax data to administer other programs. Like, don't use it for census data gathering. These are all kind of like two ends of the same spectrum. So I'm glad we've only come into this committee on the lesser end of that spectrum. But so I think totally natural question to at this juncture to get a review on how much data sharing is going on between state tax department and IRS, and the answer is a lot, but it's very lopsided in Vermont's favor. Federal tax data is like super crucial to a lot of the work we do, especially in our compliance division. Like most of our compliance processes actually would, kind of come to all the neat automated discovery programs would pretty much like come to a halt without that tax data. And this is like mostly in the world of personal income tax, corporate income tax, and business income tax. We rely on different IRS abstracts to identifying non-filers, to flag filing discrepancies, where we get like files where the IRS has, different income products like W-2s and 1099s, like different than what the taxpayer filed, making sure it knows about those so we can pursue them as well. Things like that. We also have IRS abstracts that help us identify potential fraudulent filers, things like that. So the mechanisms for this data sharing, there's one like umbrella agreement called the implementing agreement, and that's like a standard one between the IRS and all states. So not something we negotiate, independently. There's some MOUs below that agreement, like the one that we have with the IRS to run our Cambridge data modeling program that allow legislative staff to do data modeling as well, as an example. But under that implementing agreement, we do have some routine data products that we share back to the IRS. These are kind of like batch data sharing files. There's like a suspicious filers batch where when we have identified potentially fraudulent returns, we're sending that information back to the IRS. There's an audit and appeals report, which focuses on taxpayers that have successfully been audited using IRS data that we receive. There's a real estate transfer database, which I haven't learned a lot about yet, honestly. And then there's another batch, state reverse filing match initiative, where we compare the information in our system to the big federal data downloads we get. And this is an automated process that helps identify federal non-filers or federal underreporting. So when the data we get from the IRS, like income reported there is smaller than what was reported in Vermont, we'll send a kind of like an automated batch file back to the IRS with those. And I will say that we've never had any follow-up on any of those data products, including like during the pandemic when we weren't as dutifully sending those files, in the midst of everything. There was no feedback at that point either. So that's kind of like the big batch data sharing. I should add, there's also a process.
You say batch data sharing is individual data shared as a batch, or is it? Is it batched before it?
These are like automated processes where like a data file that has individual level data would be securely shared back to the IRS.
Okay.
And that's to draw a distinction between that and in another way that we would get data to the IRS is if they send us a form 8796, which is a form where they can request an individual return information on a business or an individual, but they have to like identify the tax type, the number of tax periods. This is a form that's can be used by both the federal government or other states to request tax data this is all, by the way, like all of these are only to be requested for the purposes of tax administration under this agreement. But I'll say that, no, we have not received one of these from the IRS to date.
Like ever in the history of
In the
Vermont?
history of the institutional memory of the people who would be receiving those right now. So, yeah.
How far back does your institutional memory go?
18 years at tax,
Yeah, okay.
but not at this level.
Okay.
I was the, staff attorney
Yeah.
for several years. But I don't recall. It's mostly from other states.
Yeah.
And mostly related to domicile sort of things. Like, is this guy in your state or in my state?
What is the legal parameters of you receiving an 8796 from the federal government?
Besides it being requested for tax administration, I'm not sure if there are other parameters
No.
there.
Our law allows the department to share with other states, the federal government, and actually foreign countries information for the purpose of tax administration.
And is that state law?
Yes.
Right.
And
And just
are you able to refuse under your MLU? With the feds?
On the more automated data sharing that Rebecca described, are we able to refuse? We probably could refuse, but as Rebecca also mentioned, the power of the parties is very lopsided here. And I believe all states participate in these programs with the IRS. The data that we get from the IRS is way more valuable to us than any Vermont data that the IRS is receiving. And if we want to receive federal information, we have to participate in these programs. I have never heard of the IRS using Vermont data as some sort of audit lead or anything really. I'm not sure that there's use of our information.
Do you have more you want to share with us?
No, that was gonna be my brilliant conclusion, which I think you probably said more clearly than I would have.
And then there are other ways that federal government asks us for information. It's not an automated data sharing mechanism. This is one-off cases where they're working on a specific investigation with a specific entity. And if it's for tax administration, we would share that. We haven't gotten them from the IRS as far as I know. We have gotten them periodically from federal inspector general offices. So there's an Inspector General Act at the federal level, which imposes an inspector general in many federal agencies. So they're all different in the sense that they're all in various federal agencies, but they're all operating as sort of internal auditors under one law. And they have a very powerful subpoena power. And Inspector General subpoenas have been determined in federal case law as completely preempting state confidentiality law. We had one recently with the Department of Veterans Affairs Inspector General, where they were doing an investigation of a program and they wanted to look at a little bit of Vermont tax data. And, we refuse. We get subpoenas all the time. Divorcing couples want tax returns from the other side, and we deny all those. So we denied it at first, and then with some legal advice from the Attorney General's office, it was clear that this was going to go to a federal court in Burlington, and they would most likely prevail. And so in those cases, we have provided tax information to some other federal agencies via the Inspector General program.
And I've never asked this question before, but all of your in-house counsel, all your counsel is all in-house counsel. You don't have any state AGs do you have any state AGs in-house?
Yep, we have a legal unit of assistant attorneys general at the tax department.
Okay.
And then we have some other attorneys by training at the tax department, like Abby Shepherd.
What are you?
I'm an assistant attorney general.
Oh, you are? Okay, cool. It's the fact that some departments do it that way and some departments don't is one of the greatest mysteries to me of the state of Vermont. Okay, thank you. Thank you very much for coming. Oh, yeah, Representative Bodie.
I have a constituent question, and it is, I would say that there are transfers to and from bank accounts when tax returns are filed. I think that's true. This is the question anyway. The question is, how safe is access to those accounts from state and federal government, tax department?
Well, the answer is very safe. I think that the question's about like getting a direct deposit of your refund, for example.
Yes.
Yeah.
And if the federal government is taking some actions that it has not taken in the past, can the federal government somehow get access to the bank account that's linked for the deposits or refunds?
To the tax administration angle.
Yeah,
Getting someone
I've
bank
never
account
heard of anything
information,
like
yeah.
that. You know, we collect banking information for purposes of making direct deposits. The IRS does as well. I've never heard of use of that information for anything other than direct deposit. For example, the tax department also has levy authority where we can garnish bank accounts, but we don't. We don't. Yeah, we don't use that information for that purpose. We initiate a new process under which we're permitted to levy a bank account. I've never heard of the IRS using. Well, I've never heard of the IRS using Vermont tax data for any purpose, but also not for the banking information.
They would have the banking information independently anyway.
Yeah, that's not. Sure.
If you have a filer, y'all and the legislature have done a lot of work over the past couple of years of making sure that some of the refundable tax credits that have been put in place are eligible to.
I think maybe we could. Let's talk very broadly about tax filers when we ask our questions, if we can.
Yes, so even if tax filer.
So I think generally the tax department has testified that they are protecting data of taxpayers in Vermont and that they send data to the federal government in batches that and the federal government doesn't look at, and that they can refuse other data if needed, though they haven't ever done that before, and there are risks to that.
So again, if a tax filer files a return of 0, is that tax return still, or that taxpayer still entitled to all of the same protections?
Absolutely. Absolutely.
Thank you all very much for coming.